Hey, this is Sasha. Thanks for joining me in today's video. What we're going to do is take a look at, can you trade covered calls with a smaller account? So that's what we'll go over and cover today. If you want to learn more about covered calls, take a look at the Traders Fly website. There's a lot of great free videos here and even great freebies. You can also take a look at trading covered calls with me for 3 months straight, where we put on sample and example trades. All right, let's get started here. And we're going to go ahead and take a look at some covered calls here. All right, so when we look at covered calls, one thing that you want to take a look at is, okay, the account size, because that does help. You know, the larger the account size, the easier it is to kind of make more money or premium. So first off, before we even continue going too far, if you're interested in understanding what a covered call is, you're basically buying a stock. Okay, let's say you buy 100 shares and then you're renting it out, or you're selling something at an upper level. You're saying, hey, I'm willing to buy this stock at $80. I'm willing to sell it at 90. Okay, but for waiting to get it to 90, you get to collect some money or premium. It's kind of like they put a hold on your stock, right? So you're willing to get rid of it at 90, and for waiting, you get to collect money. So kind of like you bought a house, you're willing to rent it out, and you're kind of holding it for that time frame, okay? But you get rent in the meantime. So that's what a covered call is. Now, the larger the account or the more money that you kind of have, the bigger the stocks you can trade, right? The bigger the house, the more money you can collect from rent. So here, the bigger the stock, the more money you can collect. So I might be able to collect, let's say, $200 on this one every month, okay, for every 100 shares. Now, let's say you do 1,000 shares. Well, it's going to be 10 times that. But for smaller stocks, what happens is you can collect a lot smaller amount. So maybe you've got 100 shares of a cheaper stock. Maybe it's not a $200 stock. Maybe it's a $100 stock. Maybe it's a $20 stock. You can go ahead and collect less. It might be only like $20 or $10. It seems like a minuscule amount for some people, but this is how you get started. And this is a great way to practice. So even if you have, let's say, a 300, 500, $1 million, $2 million account, you can easily practice the concept of trading options still in this way. You know, just take it slow and do some cheaper and smaller stocks. So let me show you how this works. If we go to the trading account here and we go into some covered calls. So let's take a look at a bigger company and just show you, okay, like if you're doing something like Costco. Costco is a very pricey stock. It's $532 at the time of this recording. Okay, and when we take a look at it, and I want to do a covered call strategy, let's just take a look at a 30-day out strategy, just kind of a nice baseline, 1 month strategy. And we go to a nice couple of points out. So we'll buy the stock currently where it's at, and then we'll go out to about a 40 delta, okay, 35 to 40 delta, just to talk about the covered call strategy. Okay, so how do we do that? We buy some shares. We're going to buy 500 just for discussion purposes. And then what I'll do is go out and now sell this one. And I'm able to sell 5 of them because I have 500 shares, okay? Makes sense? So I've got 500 shares, kind of like 5 houses. I'm able to sell 5 months worth of rent premium, okay? So what it's doing is I'm saying, hey, I'm willing to sell that stock and get rid of it at that higher price at $545. And that's right there, okay? So if it goes up, I make money, but then I lose my shares in my stock. Now, if we look at just the premium amount that I make from this, that's $5,725. Seems pretty good, right? Every month, every 30 days. However, to purchase those 500 shares of Costco, it's going to cost me $266 or $266,000, right? So that's quite a bit there in terms of capital. So it'll be pretty pricey. Okay. Now you might say, I don't have that kind of money. It's okay. You know, we all have different amounts of capital. We also have different amounts of risk. Some people like to trade, you know, big premium stocks like this one. But even if you have the same amount of capital, other people like to trade cheaper stocks. Like let's say something like, we'll go to Snap right here. This is an $11 stock. So a lot cheaper, but I could do 500 shares on this, or I could do 2,000 or 10,000 shares. So it allows you to actually have more kind of smaller, cheaper housing, but it allows you to sell more covered calls against it. So that's kind of a different way of doing it. Is now you could go with, let's say 500 shares here. It's only going to cost me $5,000. So what I could do is say, okay, well, let's go to let's say you had a ton of more capital, kind of like the other example. Let's go to 20,000 shares. Well, 20,000 shares now is 233,000. So it's kind of close to the other one. And you could do it this way because now you'll be able to sell a lot more option premium. Let's say 28 days out, about a 40 delta here, but you only get 63 cents, right? The other one, if we look at Costco, you're getting 1,100 for every single contract, for every tenant. Okay, whereas with Snap here, you're only making $63 for each one. However, you're able to sell many more of these contracts. Okay, so when you look at it this way, I can sell 200 of these now. Okay, and that still gives me actually $12,600 for the same amount. So you actually make more in theory for about the same amount of capital. And it's just different because the way that it works and behaves is just a little different. But granted, if you've got a smaller account, you might not do 20,000. So now you say, okay, well, I'll do 200 shares and that'll allow me to do 2 contracts. And now what you'll have is something like this. So I've got 200 shares, which will cost, you know, $2,350. However, the downside is because you have less capital, okay, now you're only going to make about $130 per month on this covered call from just the call side. Granted, if the stock does continue to appreciate, you also make some stock appreciation, but remember, you will lose that stock at the price you're willing to sell it at. So that is some of the big things that you have to remember when doing this is that, hey, that stock, you might lose that stock, but that's what you're doing is you're renting out the availability to sell and get rid of that stock for somebody else. So it's kind of like doing rent. So can you trade on a smaller account? Can you trade covered calls? Absolutely. But you just might not make as much premium if you're just doing less shares. But it allows you to still get the practice. So even if you have a large account, take a look. It's not as crazy or risky from a capital amount standpoint. But if you do a larger stock, it's much more expensive. Now, yes, you make more premium, but here in this case, you'd have to trade more contracts to kind of get the same amount. So I want to show you that, hey, even if you have a smaller account, you can still do stuff. You just might do it on smaller stocks to be able to make it happen. So anyway, I hope that helps. Definitely check out, our website here and get a lot of the freebies here. There's a lot of great freebies. Check out the courses on covered calls if you want. And if you really want to work together, where I work with people to show them how to trade covered calls and even more in-depth iron condors, butterflies, spreads, and other strategies, then check out our website. So thanks again for joining me. Truly appreciate it. Enjoy the rest of the weekend ahead, and maybe I'll see you next time. Take care.